All right. Good morning. Happy Monday. Not so happy for some, that's for sure. So what I titled the stream on social media events was "Investors Want You Laid Off." Lose your job. That's what the markets are saying here. Fire those people. So to head off expenses, recession. Who doesn't believe there's going to be a recession? Good morning, Don. We see positive reactions to people losing their jobs. So Google laid off more people. Right? It was Microsoft last week. Before that, I mean, I don't remember, just a slew of others. Spotify is up. Lay off those people. What other? Wayfair, lay them off. Get rid of the fat, cut back. Bad times, yet the market wants to go up. Yeah, yep. So here we are. Friday was an unexpected for myself. I thought it would be a kind of go nowhere day, and I will point out that I said the downside on SPX was the no brainer, not the upside, because what had the upside got hit. If you were in that, it went up above 39.60 a little bit. So markets are up here a little bit, ignoring that interest rates are moving up. And we'll look at the chart because we're expected them to turn up from here. We'll see how far they go. The dollar has not yet, so they haven't joined the party to put some pressure on this market. But just reviewing, a week or so ago, we had the risk increasing for longs, and the markets fell that day. I believe it was on that Fed guy saying he was more aggressive, and then on Friday someone else came out and said, a quarter point, whatever, and the markets went up. But I think part of what was going on there, remember going back a week before last, was we had this huge open interest in SPX. Things are up here a little bit. This huge open interest in SPX in puts and calls at the 4,000. And the thinking was, it'll hang somewhere around here. And on that Fed comments, it plummeted down to support where it held, and then rip right back up pretty deep into the red bar, much deeper on the Qs. So money definitely chasing some tech, and there were some upgrades today on some semiconductors and I think WDC and some others. So institutions are definitely warming up to that, and there will be ups and downs, of course. And if these interest rates perk back up a little bit, probably some of those will pull back. And there's lots of stuff at price resistance that have run up. So some type of consolidation makes a whole lot of sense. And then Don's pointing out CRM is up 6 points. I don't know, maybe they laid off everybody. I don't know. I didn't see that one, but so I think we're in for some more back and forth. We got the Fed announcement on interest rates coming the beginning of February, I think on the 1st, and then lots of earnings reports to pull things around, and lots of economic reports. Thursday is going to be a pretty big day, but markets are hanging on every piece of news that they can hang their bets on as to, the Fed will do a quarter. They won't even consider doing a half. Maybe they'll skip the next time, and so on. So everything's speculating around the Fed and backing off or not, and inflation, which is not going to come down significantly in the short term, but the market looks ahead. So SPX today, things are up a whole bunch. So generally, and that's why I said the downside, I believed, was a no-brainer on Friday, because generally with these zero DTE credit spreads, and I guess credit spreads in general, it is about fading the recent move. That's what pops up the premium. So now, while it's relatively close, there is premium at 4,020, which is above this high. And so that big open interest fell dramatically. Whereas if I remember correctly, it was like around 150 on each side, puts and calls. It was pretty even. And that backed off by about 100. So give or take, I don't remember the exact numbers, but that's still, going out to the next month, relatively large open interest at that 4,000. So prior high, a whole number, big open interest there. I don't like the fact that it's that far away, that close by, I should say, but I don't think it'll get above there today. I mean, it's not really in a comfort level, I'll tell you that, because just average range and so on, it could hit that, but technically it shouldn't. The downside is 39.20. Yes, I look. So, fading, that is juice down here. I don't think it's going to get down there today. More likely, it tries to get up toward 4,000. It's up a little bit. Markets are up here a little bit, ignoring these interest rates going up for now. Just some bullish follow through, whether it's still options expiration, leftovers. I just don't know. But I don't think it'll get through here today. And it isn't going to go down through the bottom of here today. There's really, I don't see anything that's going to drive it one way or the other. Whereas as we get into the week, the earnings, economic reports will start pushing things around. Okay. Yeah. Spiders. And you can see where they're at here, up a little bit, moving toward the resistance, give or take. You can see these open and closes congested right there. When you see that on a higher time frame, the opens and closes congested together, you'll know that there'll be some resistance or overlapping bars, and a lot of times a base of consolidation there. So last week survived the big ugly red candle and turned into a bottoming tail bar. So this, continues with some kind of bottoming action. It's erratic, and we just don't have patterns here to say, hey, to be aggressive on a directional as far as the markets go. It's too erratic and whippy. It is what it is, and it's going to take some time. You can see how the moving averages are beginning to cluster together, and that's a picture that's pointing to the volatility beginning to contract. And at some point, things are going to get where that volatility has to expand. And so this arrangement of moving average like this, and I don't care what moving averages you use, exponential, simple, whatever, but when you have a longer one like the 200 and a medium one like the 50 and a relatively short like the 20, and they begin to come together like that, that is the message and the thought, right? We always talk about a thought process. And so as that those come together like that, this wider, and you can see the big nasty move down and the big move up. And this is why they're coming together, where more prices are beginning to congregate around an area. And, you can draw trend lines if you like and whatever. I don't view them, believe them. I know they're not support and resistance. They could be self-fulfilling prophecy. But if you draw lines on your chart and you see them coming together into an apex type of picture, well, it communicates the same thing that the moving averages are communicating here. So we'll see at some point where they break one way or the other. All right. So we always look at the futures just to see, how things are moving, and they're not. Right? They would, sizable move up, which created a void below. There's a little bit of a void up above. And, there's the resistance up there. This is at the whole number. The futures and SPX don't match up with the numbers, but you can see there, and it backed off a little bit as it hit that 4,000. But you see the same bottoming tail bar and overlapping bars. And So you can see the depth of retracement that the NASDAQ futures had into the reversal down that day. And the upside is limited. There's a whole bunch of pivot highs up here that have never been traded above. And so as they look at this, it's like, and is this a continuation pattern up toward those highs and maybe 12,000? Maybe. Or does this turn into an M top? Maybe. Since this is a reversal, pretty potent reversal bar, and that's a pretty potent wide range bar up. So you can see as you apply bar by bar analysis and, void below, the momentum move up, this move down, back up, what's up above there, it leads to indecision. So not all stocks have indecision in the patterns, of course. And so while we look at markets for, hey, what are the markets doing? Because most stocks are going to move or be affected by what the broader markets are going to do. There's plenty of stocks that are well outperforming this whippy sideways consolidation. But YM definitely has a textbook type of M top. It's going to have to break lower. And it's interesting that it's so different than other markets, but this led the way up. It got rejected up here. It tested it. And this is your typical M top pattern where the left side has a potent reversal kind of bar like this. And this one was a failure as well. And then it retested and you get another negative type of a pattern. And then at some point it's got to break this 3,300 level. And if it does that, well, it should slice through that pivot low in 200 MA, like the proverbial hot knife through butter, since it's had this topping pattern for this amount of time. So it's going sideways. If it breaks lower, becomes supply and drives prices down into the void. It hasn't done that yet. Maybe it can get back up again. Well, we'll see. The Russell, not the same, a little similar, wasn't as extended, but it came deep here and now the retest. And so as you look at this pattern and the move up, it's above the moving averages. And this produces a bit of a different thought. Right? And it's interesting that all of these markets, while they all suggest an uncertainty about their direction, one is like, yeah, that one's going down. The other one's like, well, I don't know, it may be equally one or the other. And I look at this one and I say, well, if this could go sideways for a week or so, man, does this have the potential to go up? But I don't know yet. So it comes back down to we wait to see for more information, right? Earnings, economic reports, eventually the Fed, which, I think is more benign than whatever they're going to do versus these economic reports and earnings reports. All right, pretty much you can see interest rates are percolating up here a bit to varying degrees. We've got a breakdown failure in the 5-year. We're expecting the 10-year to flip up here in this support level, and that broke down and beginning to inch back up again. And the 30-year, showed a little bit of relative strength by making a higher low, but that's pushing up, and so far markets don't care much about it. The dollar just hanging here. So you see this bar with gap reversal, of course, clearing these highs is something should set an alert on and see if it actually perks up. It is in this area of major support, and interest rates have already moved up. And this could be the key, meaning what are the markets going to do? So if the dollar starts pushing higher and those yields start pushing higher, well, last year that was real bad for the markets. On a more positive note, intermediate term, the transports, had that deep move up all the way into the pivots where the Qs couldn't get up there and the S&Ps couldn't get up there. So that's a positive. And one of the reasons why you look at this kind of a pattern, I do, and say, hey, if this can go sideways for a while and to a degree ignore that topping tail bar, which you knew there'd be sellers up to those pivots, that could be a positive for the market, whereas the Dow looks negative. Oh, same conclusion. We just need more information here. Bitcoin came back from the edge of the abyss, or it could have broke down here into that void, coming up to the 200 MA, and that pivot. So that'll probably slow down. I think we're in for some choppy price action today. Economic reports coming out, earnings reports coming out. So be careful, as always. All yours, Dan.
Good morning. Yeah, we were every afternoon in the green room. We talk about what our bias is, and I honestly said Friday, I said I don't know. We're range bound, but scanning, I found a ton more bullish setups than bearish. So we're still range bound, and we had what's called an end of day rally. So from this breakout area, spiders 392, it rallied $5 up to today's pre-market high. And so that's not an ideal place to start buying. It's crazy. Ideally, I wanted a controlled pullback. Greg talks about the factory work. We have an end of day decline, controlled buy setup, reversal, minor support, and then we get on the longs. So always take them one by one. I'm not obviously as aggressive here as we were 2 weeks ago when we had that beautiful turn here on January 6th. We have a couple oil stocks that my alarms are going off pre-market here, so I'll be focused on them in the morning. PSA here, sloppy buy setup. I had as a put spread, that alarm went off. Polex alarm went off, buy setup. Well, I don't see any prints here now. Let me reset the alarm. Polex. All right. Let's see what I have in the watch list here. We have a ton of stuff. Earnings season here, so we'll be looking forward to more of those type of trades. Breeze. This was a bottoming pattern, and then I see one print down here, but it's bullish daily, weekly. I'll just come back to it in the morning. I'm looking for tier 1 trades, which I define as they're ready to go, multiple time frames, etc. And TFC here, I'll put it in the bottom right. This looks great. It's a bull 1, 2, 3 continuation, breakout daily, weekly. That looks good. STT, a bank stock, Alex mentioned. Ideally, it would go sideways for another day or two, but that's breakout daily, weekly. Spot, this is a beautiful example of bullish consolidation over time. And now it's gapping up. I think it was Elliott Management taking a stake in it. So nothing to do now. It sure looks like somebody knew some of that information back here, and that was the proper place to do it. MPC. I don't know. It's at the top of the range. If oil's going to go, a lot of things should go. I have Devon here on my list, XOP on my list, EOG. They're different patterns. These are more bottoming patterns, but they look higher. Cream. Greg talked about this in the video, and I also was going to put it in as a put spread, but it didn't have any juice, and they're laying off 7%. BKR, Alex mentioned he likes. The only thing I don't like is it's broke out, it's above the 2050, but it's still, when it came in ugly like that, it's still range bound. BOH. All right, this had earnings. No pattern. Could be a put spread, but it was way too spready. I personally did a naked put on this on Friday with Sam I Am. We did that. Let me put that in a window and take my profits. But now we would want a 1, 2, 3 to enter as a new trade. W is on my core long list. Here, I'm going to give it to you all again to help me watch it. This Wednesday, MT Live, we'll be talking about multiple time frames. And so this was on my list, daily, weekly, monthly. It had news of layoffs on Friday and got the thing going. But I was watching this for a buy setup and reversal. And that would have been my perfect entry. Well, guess what? The market didn't give it to me. So what do you want to do about it? Well, you either change your strategy or you do nothing. Find another setup. This gapping down. I don't know why, but that's a big gap. I'll come back to it. XLC, FDN, strong ETFs. FDN still at the top of the range, so it needs to go sideways more, but look at the weekly. That's a bottoming pattern. Now, could it go sideways and make new lows? Of course it can. But as of right now, daily, weekly, monthly suggest bottoming pattern. Jose here asking me about a couple things in Raul. LKQ. Yeah, whenever you have this is a buy setup on support on the 20. So yes, I like it. You excuse me, just don't expect a new high is all. But look at that 15-minute chart. That is a beautiful inverse head and shoulders. Look at this. All day long head, Friday morning, I'm sorry, shoulder. Friday morning was the head, shoulder, breakout, price void. Yeah, that looks great. Let's see here. Let me just copy here what Jose is asking about so I don't have to keep going back. EQX. Chase, I think hard to borrow. EQX, yeah, it's a 1, 2, 3. Greg, this was not in the 1, 2, 3 scan because I checked them Friday and Saturday. I would have put that in the letter. Jose, that looks fantastic. IONX. IONX is not a symbol, Jose, if you can fix it for me. This is a nice daily, weekly, monthly. I'd like it to go sideways a little bit more, but I'll put it on the list. SMG. This was on my core list down here. This was one I remember telling you all, I'm going to be watching this however long it takes to bottom. And we nailed the bottom over here, but yeah, it still looks higher. Absolutely. BRMK. Bottoming pattern, target 470, 480. I have enough to watch right now, so I'm not going to write that one down. IQNX. Yeah, that's not it either. Intuit, I just had an up alarm go off. This is another put spread for us. And this is a great example of there's no way I would buy this pattern. but with the deep WRB, Humana up alarm, I posted that. With this deep WRB, it's actually a closing breakout if you look at the real body. And so we're going to sell an out of the money put spread. Looks great. But I would never touch that as a directional. All right, Humana here, double bottom. It's a bottoming pattern with a retest. That is a textbook W bottom. AIZ, leg. I'm getting these alarms going off. So it's Monday morning as always. All right, so I go through these and, you know, see which ones need to be adjusted, 5-minute high, so on and so forth. JB Hunt alarm. All right, so Humana 5-minute high looks great. Leg, 5-minute high looks great. JB Hunt was a put spread. So these are all fine. So let me go to my Telegram. Humana, leg, JB Hunt. Holex, it looks like it hasn't triggered yet, but Holex looks great on Friday's high. AIZ, 5-minute high. PSA, these are all good 5-minute. Well, no, I take that back. PSA did not trigger it. My alarm went off pre-market. So I'm just going to reset PSA. That was at 290. Z. PSA, all right, did not trigger. So the entry is Friday's time. We have MRO. Our MRO, we have to wait for a pullback. XOP. Devon 5-minute high, I like. All right, so I got all those adjusted already. We can set new alarms. JB Hunt was a put spread. Look at this piece of garbage. I have a put spread on this, not liking the retracement, relative weakness. I'll let it settle down a little bit, set a new alarm, 25.75, but not liking the action.